Hello and welcome to the Blue Collar Dollar, your home for average investors seeking above average returns. I'm your host Tyler, and today I'm going to be showing you how to identify support and resistance levels, various types of support and resistance levels on charts, how you can implement that in your trading or investing strategy to become a more successful and accurate trader, and kind of explaining some of the basic generalities and lingo, whatever, around charts, technical analysis, stocks, stuff like that. So here we have the Yahoo Finance page. As you can see, here's the index. This is the SP 500, the Dow Industrial, the NASDAQ, the Russell Small Cap, and then we have some commodities here, right? These are cool. You can look at this and say, oh, look, JP Morgan is trending, and they're at $128, Should I buy them today? They're down 2.6%, or PayPal is down 3.9%. How do you know when to enter or exit or take profits or whatever in a position? That's going to come down to identifying support and resistance levels, okay? So before we get into the chart we'll be talking about is called the Japanese candlestick chart. It was made in the 1700s, and it was created by a guy who was revered as the god of the markets because his ability to really, seem to know what was going to happen. And how he did that was basically using these different candlesticks here, right? So this is the body of a candlestick. We have various types here. And you see bullish and bearish candlesticks. Bullish is a term used meaning you think the stock is going to go up. If you're long a position, you own it or whatever, you're bullish. Bearish, you generally think it's going down. You're short a position, you ride it, you sell it, whatever. All right, so that's kind of the difference between bullish and bearish. So how this candlestick works is on this bullish candlestick here, you'll have the price opens here at the bottom of the candlestick body, and the lowest point it moves during the time period that this candlestick represents comes down here to the bottom of what we call the bottom wick, right? So this region down here represents the lowest point it traded during that time period. The reverse of that, up here we have the high point, which means this is the highest point that the price moved during the time period that this candlestick represents, okay? And then the close, this simply means that this is where the price closed. So you can see during this time period, the price opened here, went down to as far as here, as high as here, and closed right here, okay? So the price closed higher than it opened. That is bullish, meaning it's going up. The reverse of that over here on the bearish, the price opened here. Let's say this is 100. It went down to 75, or it opened at 100, went up to 105, down to this low point, and closed down here. Let's call this 90. So if it opened at 100 and closed at 90, price going down. It's red. It's a bearish candlestick. Okay. I hope you're all following me so far. Now, how are we going to use what that candlestick is and those representations of price movement visually to become a more successful trader? Is we're going to use them together. All right, we're going to look at a group or a pattern or a chart of candlesticks making a trend. Okay, so for that, I actually use this website called Trend Spider. I'm not an affiliate. They don't pay me for this. I'm just a really big fan of this desktop program. So I'll go ahead and log in, choose this workstation, and as you can see here, there is a chart. If we look in closer, here are the candlesticks. You can see some bullish and some bearish, and they all have various sizes, all right, of bodies and wicks and things of that nature, okay? So these candlesticks, if we look up here, they are daily candlesticks. We could change this to hourly candlesticks. To now, each one of these candlesticks represents an hour. And we could change these to, weekly or whatever, all right? So generally, when you're identifying support and resistance trends, I start personally with the largest view that I can get, all right? So this was a SPAC, and back here, this movement is kind of irrelevant for this TA, all right? So we're going to look at this giant cluster of candles right here and how we're going to use this in our trading. Okay, as you can see, there's some red ones, some green ones. It goes up and down. It's kind of choppy. This candlestick chart is the more of the traditional candlestick chart. I personally like to use, excuse me if I'm butchering this name, the Heiken Ashi candlestick. And as you can see, it makes the trends a little more noticeable, okay? So if you have an uptrend, there's more collections of stronger green candles, and a downtrend, there's a more collection of red candles, all right? So now we can see here is our candlestick chart for, how do I hide this taskbar? Here is the candlestick chart for 1 week. So this is 1 week in time for Fisker, dating back to July 2020, all right? So if we take, a line and we put it right here at 1035, I would say that this represents the lowest overall sort of support level for Fisker. And what that means is, as you can see, each time the price kind of reaches this level, it bounces off of it or it uses it as support. Likewise, each time the stock goes up, up here, it would be the upward resistance. Now, you could come up here and go, I'm going to put it at the very tippity top, $31, $32. That would represent, a psychological resistance level, which would be everybody who owns this is in the money now, right? There's $31.97, $32, the highest it's ever been, the all-time high. If we can break this, then we're setting new all-time highs, okay? The chances of this happening, as you can see, it's hit here once. It hasn't really come back here since then. So a more sturdy resistance level to use for identifying where you might take profits or start to exit a position would be where there's more meat on the bone, as I like to say, or where the most trading in that region has kind of happened. Okay, so if I put it right about here, I could see that we've had a touch here from this candlestick's here. It's kind of gotten close here and over here, and that's about 21.20. Okay, you're not going to get extra points for hitting it exactly on the head. This is a game where we like to be right, slightly more than 33% of the time, and we can make money. So instead of trying to peg it down to the penny, what I like to do is use zones. So I would say that this is a good, support, and I would say that this is a good resistance. And all that means is if the stock price is up here and I can see it's going down, I can look at the chart and go, maybe now isn't the best time to buy this or to go long. Okay, maybe now would be a good time to short because it's rejecting breaking resistance, or if it's punching through back here, maybe now is a good time to go long. But all these do is help you identify entries and exits, and those could be for day trading, those could be for swing trading, those could be for whatever. All right, so you look at this and you go, the price has bounced one time, two times, three times. Maybe it's going to come back down. We've got a red candlestick here. So if I were to be looking to enter this, I would watch for a potential bounce again from this support region, all right? And these are, your large trend support and resistance levels. And again, all that means is support is something the price is using below it to bounce it back up, and resistance is a price point above it that it has a sort of a ceiling that it's using to reject back down. So now that we've kind of learned how to identify the major support and resistance levels, obviously the next is, how do I implement this to become a more successful investor or trader? Well, as I said initially, I like to start with the largest time frame on a chart, and I can identify, the major up and down areas. Now, what I would like to do to become more accurate is add a few more indicators and, time spans on here so I can see what is the stock doing on a larger time span? What is the stock doing on a shorter time span? And the more of those I can get that are going the right, the same direction. I'm not biased. I'm not only looking for ones that go the way that I want it to go. I just use the same ones. Let's say I use 10, and if 4 of them are saying it's going up and 6 are saying it's going down, I'm just going to listen to it, and I'm not going to go, start a long position. I'm just going to let it reverse until more of those indicators start to show, either a price reversal or whatever. So TrendSpider allows you to pull up multiple charts, however you like them. We'll pull up a 3 chart here. And on this first chart, we'll go with weekly. We can see that here is the large term trend. And I'll pull this one into a daily chart. And then I'll pull this one into an hourly chart. So now we can see, I'll take these extended hours off. We can see the charts for the weekly. It's coming down. We can see the chart for the daily right here. And again, we have that support level down in this region. And we can also see that over here. Okay. So right now on the hourly chart, Fisker has a green candlestick. Okay. It has a green candlestick with a small upper wick and no lower wick, which means where the price opened right here was also near the lowest point it's gone, and it's currently trading at the highest point or near the highest point that it has during this hour time span. We can see that it's also bounced from this region over here. So on this hourly support, we could zoom in closer and say that it hasn't really broken below 12. So if I were to be day trading this or swing trading this for a couple of days, I could look and say, all right, it's held support here at 12 since it came up, a month ago from down here in the 10s, and it's really kind of having some trouble breaking into the 13s, right? So how you could use this for a trade would be to look around, support, resistance. Is it going to break through resistance and keep going? Is it going to retest, this region that it did 9 days ago? Is it going to use this as support, or is it going to break the support and keep going back down to this cloud, to this major support down here? And if, we look over here at the daily chart, we can plot resistance level right here. So if you're doing this for a couple of months, buying down here around 10 and selling over 16, that's a 60% swing, and it's done it once. This is moved from 10 to 13. That's about 15-20%. That's just kind of an overall view of how you can use these types of support and resistance levels to identify if it's moving up, if it's moving down, if it's rejecting the previous highs or bouncing off of previous lows. Now that we've learned how to identify major support and resistance levels, we want to implement a few more things to check our potential price movements against in our trading strategy that can help us become more accurate and more successful. So what we call these other things, we call them indicators. I will turn on what I use for indicators, and my list appears up here on the left. I use the moving average clouds by Ripster. They calculate exponential moving averages over 2 various price points. In this case, I use the 5 and the 12. I also use the 34, the 50, the 8 and the 9, the 20 and the 21. And what those do is they form 2 of these lines here, right? So if you look at these clouds, imagine one of these single lines being the bottom and one being the top, and the area in between them gets shaded, okay? So if you have a positive color, the price is going up, it's 1. If it's negative, it's going the other way. And all that means is while this moving average is over this moving average, the cloud will be this color. And then when the moving averages start to turn, the cloud will change a different color. Also, they're called the Ripster clouds because they were basically coined by this guy named Ripster. Follow him on Twitter. It's really helpful. Here's the formula for EMA. I'm not going to calculate that for you. So we come back in, we look at the chart, and how do I use these? Let's add a bunch of colors on here. I don't really know what's going on anymore. What are these squiggly lines? Just bear with me. I'll break it down. So we have a few different clouds. One's a longer term trend. We'll look at the 50 and the 34. And then we have shorter trends, which are these, 8 and 9s and 21s, 20s. And then we have these two lines right here, which you can make them whatever color you want. This is an exponential moving average, 200 days, the price on close, okay? And this is a 100-day moving average. And what I use these for is a long-term indicator of price trend. While this one is above this one, the price is generally moving up. If the 100-day moving average price starts to come below the 200-day, when you see rejections and you see price movements coming down, this generally starts to indicate a bearish trend, okay? And you can say, well, yeah, it's been coming down from all the way up here. You're not wrong. That's why we have the clouds as well. So I'll zoom in on this region. If you use these clouds as support and resistance levels, you just visualize them, all right? So it's stuck pretty close to this cloud, or this cloud formed pretty tight because the price movement during this region kind of wound pretty close together, $15 to $12 right in here. As you can see, it started to break out above this 200-day moving average in this region, and it started to form an upward trend. If you look into the inside of this larger cloud, you'll see a smaller purple cloud in there. And if you'll notice, most of these candlesticks have been using this exponential moving average cloud as support on the way up. It's touched this cloud here, it's touched this cloud here again, and we get up here to what this candlestick is called a doji. There's a long wick on each side and a small body. At the top of a trend, it generally can represent a bearish price reversal coming, or at the bottom of a trend, it can generally represent a bullish price reversal coming. So we look at this EMA cloud up here, and we see that the price came all the way down and it's touched this cloud right here, and it's broken through. This is the first time it's broken beneath this support level since it took off from $14, $15 back here. So using this as a support and resistance level, if I'd entered here on October 30th at $15 and used for my risk, the bottom cloud down here, $14.50, I could have risked 50 cents and waited and then sold when it broke this middle cloud all the way up here for $20. All right. How do I know when to exit? I generally don't buy and sell an entire position at once. I scale in and scale out. If you're a smaller trader and you don't have as much money to worry about, I would still split it up so you have like a more average cost. You can spend $100 this week, $100 next week, instead of putting $200 in all at once. So then we go back to the chart and we can look at support. Now we're coming down and we're checking, we're bouncing off this EMA cloud. That's not holding. We're kind of going, I guess it's a touch through and then a bounce back up. We're not breaking previous resistance at high levels up here. Again, remember, we have these levels right here which represent resistance. So these candlesticks aren't continuing to go higher. They're breaking down. We broke this support, we broke this support, we broke into this support now. The price has flipped bearish. So you can see that the EMA clouds have started to revert, and they're all showing their negative colors now. So now, instead of using the EMA clouds for support on our way up, we're going to be using them as resistance on our way down. So if I was going to open a short position, I would do the opposite. I would use this as my, my price target back down to wherever this support level is. Let me draw that. And I would use a stop loss as the upper resistance level. And all that basically means is, in order for this price to start going back up, it needs to break some of these resistance levels. And as you can see, looking into these clouds, it's basically trailing on the bottom of this large cloud. It comes back down to the overall large trend lines, which are these 100-day and 200-day moving averages. Gets a little bit of a bounce off those, retests previous resistance in this larger cloud, breaks it. They all flip negative now, and it breaks through those. It comes all the way back down here to, this $9-10 region. And if I zoom out back to the weekly, we can see that this why is this not working today? We can see that, this region down here has been where it's always seemed to like to bounce from in the past. Looking at the weekly chart, these EMA clouds are all pretty bearish. It looks like it's rejected, breaking through this EMA, through this one, and even back over the 100-day moving average. So I would say for the short-term outlook on this Fisker chart right here, for what is this, April 11th, I would probably expect it to follow some kind of path around here by mid-June, being back down around $10. This is all technical analysis. This isn't taking into account any fundamental changes, either that's federal interest rates, that's a recession, whatever's going on with, the overall market indexes. This is purely looking at this chart. I can tell you that right about here is when they start production of one of their first SUV. So this takes into account previous price, history, and performance. Try saying that 10 times fast. And it doesn't really calculate in anything on the right side of the current candle. All right, you see some of these instances where right here this looks pretty bearish. It's kind of bouncing on support, and then we go into just a big run from $14 up to $23. What happened in here? Well, they had a fundamental catalyst happened, which was they had an auto show and they had an unveil and a bunch of press releases, and that kind of gave some price movement. So if you were to take a trade in this region, you can see it's been using this as support pretty well. And then generally when prices overextend from the mean or the average, they revert back to it. Not always, but the average is the average for a reason. So you can look at this and go, all right, well, here's the EMA cloud it's been using. It's just kind of shot way up from it to $24 almost from 19. That's a $4 off, like above this cloud down here. So it starts to come back and it just sells off. This is these short-term people taking money, and then whatever. There's some psychology in here too. You'll notice that psychological levels are also a huge factor in identifying support and resistance. So if we have whole dollar amounts like 50, 100, 75, 25, 150, people tend to be OCD. And just looking at the Tesla chart, if you'd entered in March 2020 when it touched down on these larger day moving average lines here, the 100-day, 200-day, and not exited, use that as your stop loss until it hit them again, you could have entered here at $75. We haven't even touched them back again on the weekly. On the daily, let me zoom out. Getting $75 when it touches this 200-day, and then up here 500. That's a couple 100% return easily right there, like 600-700%, if not 800. It's a little early. So you can see these are another method you can use for support resistance levels. If it's beneath it, you're going to want to see it break through there. If it doesn't, I would use this as a resistance level or a stop loss for a short position. The last thing I want to talk to you about with regards to support and resistance levels are what are known as psychological resistance and support levels, or just psychological levels. These can be either all-time lows, all-time highs, or most often, whole dollar amounts, $20, $25, $50, $100, $1,000, $75, things like that. So here's a chart for Humana, and I will just take this line, this horizontal line, and I'll put it right up here at 470. 470 represents a psychological level and an all-time high level on this chart for me. So what that basically means, well, at least on this daily chart, is every time the price comes up here, most people are selling because it hasn't broken over this, right? Like, I don't want to buy it up here because now I am probably the most expensive owner of this stock. Some people got it for, half of what I paid for it. And the reverse of that is if you're already an owner of the stock, when you get up to these regions and you see that it doesn't really go higher than this, that might be an area you want to sell or take profits at. So what that creates is a psychological level of, I don't want to buy it over here, I don't want to own it over here, I want to sell it because I think it's going back down. And that creates, a resistance level or a support level, depending on what side the price is on. So as I look up here and I see, Humana, every time it hits around 470, it just starts to sell off. I can also see that there is this 100-day moving average line down here, and that it's sitting on this EMA cloud, okay. It bounced really well from down here. It's up $100 from the bounce on this support level. It's 260, 350, 470. So I would, if you'd entered around here on this bounce back up, taking profits here, and then just cut the left ride, you could be in this sort of scenario. And what I would think would be happening is this price will probably kind of stay in this form of ascending wedge, or whatever you want to call it, pattern, with psychological and fundamental resistance level up here of all-time highs and people wanting to sell it, and right here of support. If it breaks beneath this, it could continue a downtrend until it tests the support level here. And if it's going to break out, what you want to look for is a breakout from that level. So let's say this previous level right here at 340, we got a bounce. We broke out a bit right through here. This was a strong trend. It just gave disregard to it. Then it dropped even lower. So it's a little choppy to trade. But a psychological level, once broken, can kind of get a ball rolling, right? So if we look back at, let's see, where's the Tesla chart? Here we go. If we look back here at Tesla 175, okay? We kind of broke through this previous all-time high in this region right in here. And now that we can see, okay, it might not be going lower. We've broken all-time high. We're setting new highs every day. This is when you usually have the negative commentators come in, like it's going down, you should sell it. I just follow the charts, all right? And in this case, this chart rode this EMA cloud till about this region, which was 425, 420. Everyone always makes 420 Elon Musk jokes. We come up from that and we keep going. So you can see when it breaks out from these previous resistance levels that there could be a failed breakout where, you know, it just barely comes up a little bit and then drops back down like there was on this Humana chart. You see we had a breakout. It continues a little bit and then it just kind of loses steam and falls, right? Or you can have a real breakout where the price consolidates, these candles get real small, and the price doesn't really move above this level, this $200 mark right here, until it does, obviously. And then once it does, it breaks that psychological level and it starts pushing and pushing, or dropping and dropping, depending on what side the price movement's on. All right, so watching psychological levels, either support or resistance, along with, you know, technical indicators, is my preferred way, and probably the most, I won't say probably the most, it's just my preferred way. It helps you become more accurate as a trader, you know, instead of just looking at here's the all-time high, here's the all-time low. Yahoo Finance says it's $17 today. Looking at a chart helps you be able to break down visually price movement and psychological sentiment of a stock over time. I hope you all like this video. If you have any questions or comments, please drop them in the comments section, or any request for future videos. I'd love to take some ideas. Please subscribe to my YouTube channel, drop a like. You can follow me on Twitter @BiggerPoolThanYay. Thank you, and I'll see you soon.